one thing that really captured me is this idea of more access, right? Democratizing access to certain vehicles or strategies or advantages, and getting that down to really as low of a level as possible so that everybody can enjoy it. And I think it's really cool to see, the fintech panel and talking about democratization, making it easier, making more accessibility. In that vein, the next panel, I think, is also sort of similar, where there's the opportunity to talk about investing in art and NFTs and really creating new access to an emerging asset class or investable marketplace that maybe previously wasn't very accessible for some folks. And so leading that conversation around art, investing in art, will be Rich Rifle. Rich is a professor of finance practice at Washington University's Olin Business School. During his 40-year career in industry, he has worked as a municipal and corporate finance banker, private banker, and endowment and foundation advisor. He has had line and leadership positions at IBM, A.D. Edwards, now Wells Fargo, Edward Jones, Bank of America, and J.P. Morgan. Currently, he is the Executive Vice President and Managing Director of Wealth Management, as well as a board member of First Bank, a 100-year-old family-owned community bank in St. Louis. Rich, so glad to have you leading this conversation. I'm very excited for the next hour or so, or 45 minutes. So I have to say, prior to me actually getting my MBA at WashU, I was considering getting a master's in art business through the Sotheby's program. So very excited to have Nina here. And although I will say I had an undergraduate professor that said, honey, your future's in finance. Go ahead and stick with your talents and support arts in other ways. So anyways, little plug there. But Rich, Nina, everybody, Sean, thanks so much for being here.
Thanks a lot, Ed. Appreciate, in my role as conference chair, I want to thank you for all the great work you've done in organizing the conference and serving as our master of ceremonies these past 2 days. And Ed is not only an MBA alum, he was one of my former students. So it's great to see him thriving in the financial services business. I also want to just take a second to thank so many people that participated in the panel, not just our panelists that I'm about to have this great discussion with, but all the many that preceded this yesterday and earlier today and yet to come later today. And again, a thanks to everybody behind the scenes at Olin. Huge undertaking, and everything's been running remarkably smoothly, no internet issues, and it's all been wonderful. So when we decided to do the conference virtually, that was a pretty big decision, and it's worked out pretty well. So thanks everybody for participating and for your help and for attending, to those that are tuning in now. So I'm joined today by a former and fellow Tufts Jumbo, Nina Del Rio, who is the vice chairman of Sotheby's, and Sean Groves, the chief operating officer at Masterworks. I'm not going to go into their bios in depth. Their bios are linked on the conference website, but you're going to learn more about them and their career arc and what they do in our discussion today. We're going to have a discussion about traditional and emerging art markets and various investment vehicles. And I have to tell you, unlike Ed, I studied engineering and I have an MBA in finance. So I know very little about art. I know what art I like, and I love some of the art that is on Sean's platform that we're going to learn a little bit more about today. But mostly my art is like refrigerator art and Velvet Elvis and dogs playing pool and that sort of thing. So I have to say, when I visited with Nina and Sean for the prep session, I learned an incredible amount about what goes on behind the scenes in the art micro market, and it was fascinating to me. So I've never been a purchaser of art. I've been somewhat an admirer of art at art museums, but it was really amazing. And we are fortunate to have two people as panelists that are steeped in this and have been doing this for a long time and are doing some cool things to kind of change the way investors as well as collectors look at the art market. So I'm excited to have that discussion. So again, thank you, Nina and Sean, for being here. We've got some prepared topics that we discussed in our prep session, but I know there's a lot of passion and ideas around art. So I'm looking forward to kind of a freewheeling discussion. And I would encourage our attendees to throw a question in the chat, and I'll be monitoring that actually in the Q&A box if you would, and I'll monitor that as questions come up. Sean and Nina, I'll pitch those to you. So I wanted to start with Sean, actually. And Sean, I have to admit, I had never heard of Masterworks. I have to give you full credit to your marketing team because likely through LinkedIn or through some email, I became aware of this, and I just cold outreached to Masterworks to learn some more. And as I learned some more, I said, this would be a great topic to include in the 6th Annual Wealth and Asset Management Research Conference. So with that, I'd love you to tell our audience a little bit about the unique way you have of facilitating investing in art.
Yeah, thank you, Richard. Really appreciate it. I appreciate the compliment on our marketing team. They're really great. They've done a lot to go to market, but it's really because I think the messaging is pretty compelling. So as we think about art in general, it's really the largest asset class that has never been securitized. And so Masterworks started in 2017, 5 years ago, with the objective of making art investable. And how they did it is really through old school methods, effectively facilitating public offerings of artworks via SEC qualified offerings, Reg A plus offerings, and those are the artworks that are facilitated via our platform. But in referencing some elements of my background, I came from a pretty extensive asset management background, working with private equity and hedge funds, managing equity and debt portfolios. And so seeing and understanding a new asset class like this is really compelling. As well, I came from the wealth management space, working at large RAs, wirehouses and the like, and really understanding how to think about integrating assets and securities into overall portfolios and think about asset allocation from a wealth management and client standpoint. And so we really see art as being fairly compelling. And then as well, I come from an educator perspective, working as a professor in a similar way that Richard has a number of universities, so being able to teach graduate and undergraduate classes at a number of universities. So as we think about art, it is what we perceive to be the largest asset class that has never been securitized. And as we think about how to actually facilitate that, we really want to provide access to for advisors, so wealth management advisors and individuals, to that exposure. And there are a few key components as we think about art as an asset class that is very different than what we see generally in other asset classes. If you're going to look for and just create and think about what are good components of any asset class that they were coming to market, it's really a focus on large. So having the largest asset class provides a lot of opportunities for others to invest in. And art is actually a 1.7, nearly $2 trillion asset class. It's just shy of private equity, but it's actually larger than real assets and private credit. So as we think about the opportunities that are out there, we see it as a reasonable approach for portfolio construction and asset allocation. Plus, as Richard mentioned, we are the sole entity that's providing access to that art market. But also we look at track record. So the consideration that post-war contemporary art, so art essentially created after World War II, so over the last 60, 70 years, has exhibited a pretty compelling track record, tracking at north of 14% for the last few decades. That's outpaced S&P 500 by about 5%, where S&P 500 is roughly 9-ish% over that same period, and in line with private equity over that same period of time. As well, we look at the track record of art. So if you think about how long indexes and benchmarks that you as wealth managers or you as students actually look at, a lot of those go back in certain cases only a few decades, as you think about private equity, private credit, and a number of even public asset classes. And so we look at art, and actually historical records are out there, and you can resource that go back several decades, if not several centuries. And one of the key components of art, as we think about it as an asset class, is really thinking about its lack of correlation. It's really uniquely uncorrelated with any other asset class. And so that provides a benefit as you think of portfolio construction in the way that art can actually help out nearly every portfolio. And I can talk about that later. But in general, looking at ways to improve returns, decrease volatility, improve Sharpe ratio. And then as well, art is unleveraged. As you think about other public asset classes and private asset classes, a lot of them, if not all of them, are exposed to leverage. So as we think about, where Masterworks is, we're really facilitating a focus on artworks that are post-war contemporary, that are 1 to 30 million in size. And as we think about that, there are target artists within that subset that have higher or better risk-adjusted returns. And that's really been our focus. So what we do is facilitate those portfolios and exposure to those artists. As we think about, where Masterworks can really help out clients is a general consideration of getting, broad-based asset allocation and portfolio construction for the benefits of all clients. And again, we see this as an opportunity going forward.
Thanks, Sean. So Nina, your firm and you've spent a lot of time in the traditional art market, a very large unsecuritized asset class. So when I think about the role that you've had advising your clients, collectors, potentially investors, it's been significantly different, I think, than Sean's, perhaps scientific, but maybe less data-driven. Could you talk a little bit about how you advise your clients and where you see Masterworks now kind of fitting into that advisory landscape?
Yes, happy to. Thanks again for having me. I do spend a lot of time advising clients. And in fact, I work with many different clients, which is a lens which I think is sort of helpful to understand. First is I work a lot with museums and large public entities that are collection building on a large scale, looking through a qualitative lens and probably less of an investment lens. So that's just one part of my brain. And in fact, I come from a finance family, so I'm always looking at art through the lens of finance too. I work with large public corporations who are always making financially driven decisions. And then finally, I also oversee our advisory practice, working with individuals as they think about, and we never really call it investment. We need to stay away from that. We love what Masterworks is doing, by the way, the sort of disintermediation and breaking things down. Democratization, in fact, really feels right and a very real direction to us. But again, Sotheby's is not, you're not using us as an investment tool. We're not your investment advisors. So all that to say is we're thinking about collection building. We are always underpinning decisions about whether to buy or sell art from the perspective of, are you at least getting your investment out of it? And what is what's the likelihood that you're going to increase on your investment? And so what do we do with our clients? We help to break down decisions. It's in a way not unlike Masterworks, but it's from a slightly different perspective. So I would say there are two sides to this, and you're not in front of me, but I talk with my hands a lot. One is we're helping to contextualize actual artists and help our clients to make qualitative decisions. All right, so where does this artist fall within the context, both chronologically and geographically, with other artists? And where does this work itself fall within the umbrella of the artist's work? Is it good? Is it interesting? Does the market like it? So that's factor number two. What has market performance been to date? And how do we read the market? And I think this is where Masterworks and Sotheby's probably approach things slightly differently. But I think at the end of the day, we're probably coming to very similar conclusions. But in fact, we are, and the auction houses by nature are transparent marketplaces for the most part, or more transparent than other organizations that help to buy and sell art. But we are helping to understand, okay, so when this work, if you're a living artist, where did this work start on the primary market? Primary being like when the gallery sells the work, what was the price? Where has the price gone from then? Because much of this is incredibly opaque, right? So the art markets are very different from the financial markets because the majority of transactions are not visible to the rest of investors, which is why what Masterworks is doing is so important, because they're essentially saying, we're going to make this a little bit more transparent. And I think it was Ed who was just talking in the last session about democratizing access, which is in a sense, I think, what Sotheby's does and what Masterworks does in a very general sense. So we're helping our clients. We're bringing visibility to those transactions. We're helping you understand, where's the market for this particular artist? Where does this work fall? Qualitatively, where is it? But qualitative and market forces should go hand in hand, right? So we're helping you essentially buy art, sell art in a smart way. And when I have a new client who I'm working with, and we're doing something complex, I'm breaking this down. And in fact, we're going to help you make a complex decision with confidence by making sure that with you, we're covering all of the data points. We're looking at where the market has been. We're looking at these qualitative data points. We're helping you to really feel confident that you're reading that 1932 Picasso the way, contextualizing it with the rest of the artist's work and also other artists around them. So I think while it's not a simple business, we are trying to bring some sort of good benchmarking. And in fact, I hate this word, but it's really true, a little bit of indexing in these decisions. So qualitative indexing, but also market indexing. It's not a science. I think Masterworks has really, they've cracked some code that we perhaps haven't cracked in terms of really mega indexing and securitizing, but it isn't dissimilar. And we can go into what data points do we all look at to help us to read markets upwards or downwards. And many clients ask us when they're making decisions, okay, what's the likelihood that the value of this work is going to increase over time? What do you think my risk is? And we do help to answer those questions.
This is great. If you go back and look at markets over time, there were a lot of markets that were more qualitatively traded, go back 30, 40 years before it was easy to collect data. And a lot of market participants were making a lot of money trading those markets rather. And then when the data became available, we started to research it and study it. And then you find that there's some rules and it becomes a little bit more efficient. But it also becomes a little bit more easier to forecast. So it seems, Nina, like what you're saying is qualitatively, you've been doing that for years, and now Masterworks is bringing a little bit of that rigor to it. So this is a cool emerging research topic, perhaps. So we've talked a little bit about opaque markets, transparent markets, data. We had yesterday we had a presentation on efficient markets. Today we had a presentation on municipal finance, which is notoriously a less efficient, less transparent market. So I see those themes coming through here. So I want to drill down a little bit, Sean, on what is the data exactly that you're looking at? When you say you're returning 14%, year over year based on your study, that's extremely compelling. And when I see a Basquiat selling, for huge sums of money, I'd say I want to get a piece of that. So talk a little bit about the kind of the data you look at and the scientific rigor that you're bringing as you decide what to put on your platform and offer to your clients.
Yeah, thank you, Richard. We think a fact that is fairly interesting is a firm like Sotheby's has actually been around for 275 years. They were actually one of the first IPOs in the market. And so it's been a market that's been around for an extended period of time. In general, those that have participated in the art market have been the ultra high net worth. And so if you think about the art market overall, it really has been a call option on the ultra wealthy and their ability to continue to generate wealth over time, providing support for the art market. So as you think about historical returns, I think they're somewhat supported by that trend historically, and we think in the future. Now, another point that Nina made was around the approach in looking at art. And so historically, there's been a focus primarily on fair market valuation and the qualitative process of looking at art. So in that case, you're looking at the provenance of the artists and their artwork, the history of it, You're also looking at other qualitative factors that Nina and our art research team are much more adept at, and I will overly simplify it as to whether or not art looks good, bad, or ugly, and the quality of that. We took a slightly different approach. Our founder, Scott Lynn, is a serial tech entrepreneur and had been in the art market with Top 100 Collection over the last 25 years. And he was always perplexed by why he couldn't get quantitative information on the art market. And as you look at the data that had been available, it's really been a very small subset of all of the art transactions that are out there, and they only go back for 10 to 15 years. So within that, Scott hired roughly 30 analysts on an extensive project to look at not only the public information that had been aggregated via databases, but looking at paper catalogs, bought up north of 3,000 of them, and had them aggregate all the transactions over the last several decades, going back 60, 70 years. And it helped lead to a few new conclusions. One, we are the only firm actually thinking about capital appreciation in the art market versus fair market valuation. And within that, it allows us and informs us of which artists and artworks to purchase based on risk-adjusted returns. As Nita reflected, post-war contemporary has fared well. And as you think about that, there are other artists and specific artworks that have fared exceptionally well. So our focus has really been on of the 7,000 artists that qualify for review. We only really focus on the top 1% of artists, and within that, really the top 3% of their artworks, in order to determine which artists and artworks have the best annual returns. The other thing we think about is that database helps us provide a view on the art market. As we say, we basically have the Bloomberg for the art market, and we're the only one with the license to access it. And so that comprehensive database helps inform actually the artworks that we acquire. So our quantitative team is helping inform that process. And then our art research team of 15 people is actually going through the process of evaluating it both qualitatively, but also sourcing art to buy and sell from a number of different collectors, providing valuation alike. We think the quantitative approach helps in a number of different ways. One, on investment selection, that you are able to see certain elements of historical returns, risk, volatility, drawdowns, Sharpe ratios, a lot of the metrics that are studied in investment classes. But it also helps on investment sourcing, in that in being the largest buyer in the art market, we actually see more works in the art market. So that's a sourcing mechanism. And it also helps us really evaluate quantitative trends, so momentum across various artists and artworks. We're also able to instill other metrics that help inform how broad the art market is. So as you think about volume, we actually have people at auctions that record the number of bids that come in, which is unique. It helps us know and understand bidder depth and what our abilities are to not only buy art, but also sell it over time. And we also have a macroeconomic team that's looking at certain aspects of the art market in general and how that may be changing over time. And while there's virtually no correlation with any other major asset class, even macroeconomic data, we're looking at other factors as far as growth of international markets and activity across Europe and Asia that wasn't there in the same way 20, 30 years ago. And then sort of certain artists that pick up adoption internationally more broadly, whether or not it's Banksy in Asia or looking at Kusama in North America. That helps really inform some investment decisions as far as asset allocation, portfolio construction, and a number of different artworks that we buy over time.
Thanks for that. So the question about geography, there's a question here in the chat about demographics and generational considerations of the buyer market. Could you comment on if and how that's changing and how that might be driving different demand for different artists? And Nina, we'll start with you.
I will start by saying we're seeing this change quickly. And there are two factors I'll just point to. One is there's a huge amount of movement in living artists, and part of what Masterworks invests in and where they focus, of course, is post-war and contemporary, but in particular in the living artist space. So talk about number of participants. Well, you've got a younger demographic and also the older set, sort of traditional of these high net worth individuals who've been collecting art over time. Many multiples of people participating in the primary market, meaning trying to get access to these living artists that are sort of hot right now from galleries. Access is hugely restricted. So let's just put a marker on that point. Restricted access is driving this market in exponential ways. And so all of the auction houses, the major auction houses now have dedicated sales focused on this area because buyers can't get access on the primary market. So they're looking to the secondary market, and it's driving prices up. And this is where we see participation from a younger set. So that's, put a marker on that. That's one area. And the growth of our new buyers, meaning buyers we've never transacted with sale over sale in this area, is growing. And it's like it hovers like between 20 and 30%. So that is significant for us. In addition, and during COVID, when essentially sales went on screen, and we were very strategic, and we were also very lucky in that we had laid technology tracks before COVID, obviously not having predicted what was coming, but we were able to pivot and essentially put all of our auctions on screen, where every other art seller stopped. All the art fairs stopped, the galleries closed, the other auction houses postponed. We didn't. And what we saw happen is even, any arts organization, even a museum, started communicating with its constituents, its clients differently, and communication became streamlined. Printed catalogs went out the window, and all of a sudden we were talking to our clients in a different way. And our clients were spending a whole lot more time on screen and digesting really important sort of cultural fun information for them that, this wasn't work, this is their passion. And we saw a huge uptick in new buyer participation at that moment, which has in part sustained, not in every collecting area, certainly the direction, and NFTs are not a linear, it's, the arrow is not moving in one direction, it's zigzagging. Of course, I guess that would be 2.5. That area, in addition, is where we're seeing participation from a much, much younger demographic and a much larger percentage of new buyers. So I think we've been really happily somewhat surprised. We'd like to be able to predict these things. We can't always. Happily surprised by the numbers of participants are growing. The demographic is skewing younger in the markets that are moving really quickly. And I think it's, that's a self-fulfilling prophecy, because the more buyers you have, the more movement you have in those markets.
Great, thanks. Sean, any quick observations on generational changes?
Yeah, I would just echo what Nina said as far as younger market generally, given, as she was referencing, the living artists, and we've seen individual artists, increase in popularity, and it's also led to substantial capital appreciation in their markets over the last few years. As well, online auctions has led to, I think, a broader base of potential participants, which is informative as you think of who would be participating over time. A couple of other things that we've seen in the markets is a focus really over the last 5 to 10 years on artists and artworks that have and focused on identity as a consideration, and whether or not it's a focus on gender or race, and having that affiliation and association and representation within that space. It's really driven a trend as far as migration of assets and interest and capital appreciation within those artists that we think would continue to be ongoing. As well, and I've mentioned this, the growth internationally within artists and artworks as they become more internationally known, not only Asian artists being known in US and Europe, but alternatively European artists being known in the other markets and domestic. And just one other point quickly on NFTs, you're right, it's a highly volatile market that is very young, and we constantly get asked that question. And our consideration is really, we're focused on existing physical art that's been around for decades, that has historical returns over decades, and referencing that versus NFTs, where we've actually done a good amount of work on this, and trying to create an index is one thing that is a challenge within NFTs. 2, understanding how new and volatile it is. And 3, our consideration is really around asset allocation and portfolio construction, And so as you think about how to guide clients from a wealth management perspective, with our guidance at roughly 5% of portfolio construction and asset allocation for clients, which is in line with Credit Suisse, Citi, UBS, and their research as it relates to art and asset allocation. Those are the considerations that we think about whenever we're looking at demographic changes and how people can get broad exposure across the entire art market, basically, if whatever your age.
Yeah, thanks for those comments. The whole topic of NFTs and anything blockchain, like any of the cryptos, Bitcoin, top of everybody's mind. Doesn't seem to be a lot necessarily happening on that in individual portfolios. I think a lot of people are kind of waiting and seeing. So more to come certainly on that. We only have a couple more minutes, so I want to toss this last question out to both of you quickly. We have a lot of advisors on the phone, so if you could just make some comments, brief comments about how advisors should be thinking about art in the context of advising their clients. Is there a best practice that they should be bringing to clients when they think about integrating art or not integrating art into a portfolio? Nina, we'll start with you.
I mean, I think I want to be honest, it's hard for me to look through the lens of a financial advisor. I work with a lot of financial advisors, and the way we bring transparency and breaking down both qualitatively looking at an artist and reading a market is exactly the same conversation we're having with a financial advisor. I will say this, there are tools we can bring to collectors and financial advisors to help introduce more liquidity into, you're an art collector and you've spent $100 million on your collection. Why should that be on your wall? Let's leverage it. We obviously offer through Sotheby's Financial Services a large suite of tools to help you do that. But I don't know that our conversations about, we're not having the conversation of let's build your portfolio. So the financial advisor is often just helping the collector. We're having the same conversation with them of let's break down the decision making and help your client make a confident, smart decision that they go into with eyes wide open. I'm sure Sean has a much more nuanced response to that.
Sean, you'll get the last word here. Thank you.
Oh, I appreciate that. Thank you. We look at it not only from our perspective, but from external third parties. We think it's interesting in Deloitte surveys, roughly 8 years ago, 50% of wealth managers wanted exposure to collectibles and art for client portfolios. Now that number is actually up to 85%. So we see overwhelming demand from advisors for including these type of assets in client portfolios, but they haven't had a way or means to access it. Again, referencing Citi, they've done a good amount of work on asset allocation portfolio construction where their guidance is closer to 4% for a number of different reasons as well. Credit Suisse references ultra high net worth investors and their allocations are closer to 5%. As we think about, from our perspective, allocation to art, and we're hyper mindful of considerations around liquidity risk, vintage year risk, and the like, our exposure, and while the models actually work out in favor of a much larger allocation, if you track towards a 5% allocation to art for the last nearly 2 decades, and think about the considerations of overall aggregate returns, lack of correlation, lower volatility, in including art at a 5% allocation relative to a 60-40 portfolio, or a diversified portfolio including public and private assets. Even if you look at an endowment model exposure where it's primarily exposed to private assets and alternative assets, allocating 5% to art has historically increased returns over a 10-year period, all the recurring ongoing 10-year period allocations. It's increased returns, it's decreased volatility, and increased Sharpe ratio. So as we think about, art over an extended period of time in the allocation, it's within that mindset that it could be helpful. So we're, very clear with our clients of what our views are on asset allocation, that they shouldn't get overly exposed because of these considerations, but think ongoing allocation via vintage year diversification or exposure to art can be for a lot of advisors and their clients' interests.
Great. Well, thank you, Nina and Sean. You've given us all a lot to think about. I know I will certainly look at art differently. I'm really intrigued by your platform, Sean, so I'm looking forward to learning more about that myself. I want to thank you both for your time and your great comments. I want to encourage everybody listening in to check out their links on the website and learn more about both organizations.